Are these upcoming indications for a crash? We had such a strong market after March, and now the market is not gaining anymore. No, vice versa. The market is coming down currently, and sometimes in a strong manner, currently a little bit in a waiting position. And this is giving us an indication where the market will go ahead of the US presidential election. So it is really, really exciting what the market is doing currently. It's really, really important for us traders. Let's have a look, because there are good indications how to deal with the situation. Okay, let's have a look at the chart then. Let's start with the Nasdaq future. In this case, most of the time I have a look at the future prices, because this is what we trader can trade. Of course, if you have some different contracts or whatever you like to try to trade, you can adapt this, and you need to adapt this maybe to your levels, but you can always find the orientation in the future chart to see what the market will do next. And this is a quite important question. Some people are still thinking, the chart technical guys, they believe that they can read the future out of the chart and knowing what will happen next. An earthquake, some kind of peace or war in some region of the world, or whatever it is, or the numbers from the labor market, whatever it is. And of course, we cannot read this through the chart. It is not the hidden holy grail nobody knows about, and we can exactly know what happens in the next few days or hours or weeks or whatever, what time frame you prefer. No, it's not. But the chart technical traders, they can see through the charts what the market participants, the traders, currently see in the market. Are they convinced? Are they happy? Are they panicking? This is something you can clearly read out of the chart. And this is something what we do here. Of course, this gives us an opportunity to estimate what the market participants will do next. If you see they are enthusiastic and they love the charts, and then you can guess, okay, I guess they will buy this market. Or if they are panicking, you should not go long in this market. So this is helping us for our decision making, and it is giving us a good opportunity to calculate our trade. This is something most traders, especially retail traders, are not aware of, that you have to calculate your trade. It is a probability game. It is important that you understand that never ever we know exactly what will happen next, but we can know, or we can have some information about how probable is this outcome or that, and how many stocks or how many future contracts or whatever I need to buy, or I want to buy, or I can afford to buy, because I can calculate my risk on the next trade. So let's start with the Nasdaq future. In this case, it's a really exciting market because of some few stocks which were driving the market to, skyrocketing the market in this case. And so let's have a look. I always use 4 charts so that you have a better idea about that. This is the weekly chart, this is the daily chart, this is the hourly chart, and the 15-minute chart. This is changing sometimes, it's not always the same, but always when I have 4 charts, if not stated otherwise, this is the longest and this is the shortest, so that I have an overview about the current situation, and some really, really details about the current situation. So this is giving me an extra hint about what to expect next. So this is the reason why I always have one instrument on all 4 charts, so that I have an overview and the details. So let's have a look at the daily chart here. I can size it up a little bit for you. This is the March low after the Corona crash, and we had this fabulous skyrocketing market from that level here to the upside, which is roughly 12,480. So it's a big move that we had here. But all big moves, all impulsive moves, all dynamic market movements need some setbacks sometimes. And for that we have an instrument which is called the Fibonacci retracement tool, for example, and you can measure this from the beginning of this move to the end of this move, and we can see here the 38.2% level, which some people believe is a typical target for the market. But what about some people? Who are these people? And are they right with their estimation? Is the market really going there? And will the market really turn at that level? And this is something we have to think a little bit deeper about this, because it's really crucial to understand that these levels are not magnetic. It's not that, here's a line, the market needs to go there. That's absolutely not the fact. It is for us an indication how far the market went down already. So let's have some number crunching, but don't worry, you don't have to be good in math. I just show you something so that you can understand a little bit more what is happening currently. You could see that we had a strong market in the last few months. So let's think about, this was the March low we had here, and this was our high in the chart. Currently is the market a little bit coming down. So this is a very typical wave structure. We can see this in so many times. Sometimes you cannot see the small breaks here inside this, the small corrections, but if you see them, you can clearly see, okay, it's very typical to have a 5-wave move. You can see it 1, 2, 3, 4, 5, or in the bigger picture, you can see 1, 2, 3, 4, 5, whatever it is. But you can always see that these are interrupted by small setbacks. And this one, for example, for the second wave. And let's think about what is happening if this is the March low. This was our last high until early in September, and the market came down here some way like this. So this is something we can expect very often, to see something like an ABC pattern. This is very typical that corrective patterns are looking like an ABC pattern. We will go into these details later, but just for you to have an idea where the market is going, let's think about a typical ABC pattern. But that's not all. We also have some information how far this will go down. It would be nice if we could understand, okay, what shall we expect? Where is this price going? Where is this level typically? And therefore we have some kind of a database. It's not a public database I'm allowed to show you, but it's not privately owned by us or my company. So I can show it to you, but it's not maybe publicly in the public. You cannot get this information, but I can show you and then give you more details about this, no problem at all. So what we have here is something like a second wave comparison to the first wave. So we can see second wave compared to the first wave, how big is this drop? And here you can see the percentage of the drop. For example, here is the 50%. In this case, this would mean that the second wave is coming down halfway of the way of the level from the first wave. This would be 100%, and we can clearly see, okay, 100% is not possible. It is a little less than 100%, but never over 100%. And could be only 10%, 20%, and whatever. So this is what these numbers here on the lower side mean. On the other side, you can see that we have a curve here and some kind of area below this one. And what we need here is not the distance from this ground level here. That's not important in this case. It is the area we have here. So how big is this area? This is representing 20% probability. This is representing 20% probability. And this is representing 60% probability. So now let's have a look how far the drop has been already. Currently the lowest level was here, and to have a better estimation, we don't need it exactly. I just add another Fibonacci line at 23.6 so that we can see, okay, halfway between both of them is roughly 30%. So we can see, okay, this drop is more or less 30%. We don't need it very exactly because all these data are just rounded and not 100% precise. It's not very important to have this one, but we can guess, okay, we had a 30% setback so far. This is roughly here. So if we have to guess, is it typical that the drop is further down? Or is it a very typical setback? And if we can just think about which area is bigger, left side from my arrow or right side from my arrow. And it's easy to see, even without doing some math and calculation here, we can see that the area on the left-hand side is way smaller than on the right-hand side. So the chances chances that the lowest point in this correction is not found yet is bigger than this is done already. So this is the first conclusion we can have out of this one. It's possible that it is the lowest point, but it is not most probable that this is the lowest point. So we should think about that like, okay, this is part of the correction, but it's not typical that the correction will end here. It is more typical that this will be on a later time, on a lower level, wherever it is. It can fall from the current levels. It can take a little bit longer time. This is something we should expect. So it might be not over yet. Probability is higher that it's not over yet at the current situation. This is the first thing we can learn out of it. The second is we also have something like the time we used for this run up. And we can see this is the same speed line we had here. It's a mirroring the level here. And you can see, okay, we were faster. So, okay, it's a correction in a strong move. So everyone is bullish and everyone is believing that the market needs to gain. Why the heck everyone is selling the market so fast, so strongly, if everybody is thinking positively about the market? It's not very typical. So that's the reason why we normally use this line as an orientation. If the market is showing us a low before this descending price line here, it might be too fast. And we can also think about this in a very, very mathematical matter. For example, we can measure, this was the start for the bull market and this was the end of the bull market. I just do it on the basement here so it's easier to read the levels. So from here, ending here, this was the bull market. This was 100%. So this was the length of the bull market in this specific time. And we can see the lowest point was here, roughly here, one of both. And we can see here's 27%. So in this case, the correction was only 27%, but it is only here. So it is roughly half of it, or it's less than half of it. So let's think this is roughly 11, 12%. So the time needed for the correction, this time, compared to this time, is only a little bit more than 10%, 12%, but below 15%. So let's have a look at this as well. We can see, okay, if it's a strong market, in the equity market, in this case the Nasdaq of course, and it is a rising market, we check the time, for example, we can check how long does it need the second wave. And we can see, okay, we had not 20%, no, it was not 50, it was not 15%, it was 10 plus a little bit. So you can think about the probability, no, this was the end of this corrective pattern. Or, oh no, I believe the chances are way bigger that it takes a little bit longer time. It does not necessarily need to be the same time, of course. It can be in a shorter time, but more than 10% or 20% or 30%, 40, here, somewhere around here, it is halfway. Don't get the wrong impression, because this curve is very high. The area below this curve is a little bit unbalanced, so it is not halfway. This is not halfway of the probability. It is roughly here, because this is very high, this is very low. So you can cut this out and fill this here in so that you can see, okay, roughly, let's say 45% is halfway. But this is, this is way too early. Here is 40%. So something like this, or a little bit more, or 50%, which is here. And finally, we have I think some kind of a really, really nice situation currently here, because we are ahead of the US presidential election, which is early in November. And what we could expect is that the market, until then, is not moving very far in any direction, because everybody say, what will we have? No matter what fanboy you are, or what you're thinking who will win this, or what you prefer, Until then, everybody tend to be on hold and say, better wait a little bit and see what will happen. So I think all these indications are leading to the conclusion that the market is still not on the lowest point, is still in the corrective pattern. Whatever we are seeing here is giving us an indication, okay, there is a little bit more to come. So what out from this, what we should expect is something like a first move down, a second maybe something like this to the upside, and then a third wave or a C wave down. In a corrective manner, we always talk about letters, so it is an A, B, C correction, for example. It doesn't necessarily need to be like this. It can be in a different shape. It can be stronger or faster, or it can be here a little bit spending more time and the end is faster. Things like these are all possible. But this is indicating the corrective situation should not be over now. We are still in the situation that the chances are good that the market will lead a little bit lower. Does it need to be exactly this level? No, it does not. It is very typical that the market is thinking about things like this, the last level or the last intermediate low in a movement, which is this level here, which is perfectly fitting to the Fibonacci 38.2 relation and is roughly around 10,200, let's say 75, but it's not exactly about the 75. It could be 400. It even can be 500. It could be 10,000 as well. It is roughly saying around this level. But the more of these levels are together, this is something I will deal with in a later video. So please don't forget to subscribe to this channel. I will do tons of videos. I just started this here in English language. I have many of them in the German language already, but as I'm living in Tokyo normally, not now because of Corona, and I'm not able to move so far, but I'm working together internationally. I started now this English service. So if you want to have more videos like this, give me a thumbs up. It would be really appreciated. And don't forget to press the subscribe button and the bell so that you are informed when I set up or bring up anything new. Something I want to bring is something with the Fibonacci cluster, which is giving us a better indication. Okay, here are several levels, but it's not something important at the very moment because we need a little bit more data to have this one. But this is giving us a good opportunity to find turning points very early in the market. Okay, so that was the Nasdaq. First glance with the Nasdaq. What about the other indices? For example, with the S&P 500. And we can see if we do roughly the same thing, let's do it a little bit fast forward here. We can see, the same situation, strong market to the upside. And also here, we are far away from the 38.2 level. It is really, really typical that the market needs a little bit more time. And what I would expect in this situation is something like a typical ABC pattern, maybe an ABC here to the upside, and then some fast here to the downside, which is a very typical corrective pattern. Some people say, no, I never saw this. And when the market is going here and overshooting, maybe overshooting, giving us a new all-time high, this is a perfect situation to buy the market. No, not typically. Very often people are thinking, when we overshoot the latest high, then this is an indication to go long. No, I will show you in following videos that it's not the perfect situation. It's not about trigger in this video, but I will show you where you can enter the market at a good price. It's never the last high. Do you remember situation here? It is 2018 and you could see, we have a new all-time high, and after the all-time high the market came down. And if you think, that was a good opportunity to do next time. No, after overshooting the all-time high, the market came at least down. It is not a big deal, but it's sad if you go long into the market here at that point, seeing that the market is turning around. And the same situation like here, and the same situation seems to be like this here. Of course, it's not in any situation the same. It's in every situation. For example, sorry about that. You could see here in the summer 2019, we had a situation that the market was overshooting and not coming back immediately. But this is not proving that this is a false idea for not going long into the market after overshooting. It is just showing it can happen. but probability wise it's not really smart to do that. It's better to wait for a different entry, but this is too early in this stage. We cannot do this now, but this is a very typical one, a very typical corrective pattern we should have in mind. If you're interested in this one, maybe I will do this in a follow-up video. It is looking like a flat corrective pattern, ABC down, ABC up, and a 5-wave move down. It's a very typical one. If you think, you're really typical, FL stands for flat, and if you see this is a probability pattern for typical corrective patterns. Second waves are always corrective patterns. You can see it's never some strong move, it's always some corrective pattern, and 33%, 1/3 of all corrective patterns are flats. So it's not really rare, it is really, really common. And if you combine this with the double sideways, which is looking quite similar to the flats, if you combine these together, then you can see it's a more than 50% chance that it is one of these patterns. And it's the same in a rising or falling market. Also for commodities, it's roughly the same, so not a big deal which one you choose here. So things like this happen very, very often, and so you should take this in or keep this in mind, that this can happen. So don't get overexcited for the bull side when the market is overshooting here. So before I let you go with these ideas, it's just the starter video of this one to give you an impression what we are looking at and what our idea is for the current situation. Let's have a look at a shorter time frame, because I think it's really important to have a look at this one as well, to have a clue what we should expect with the market. Currently, this was the lowest point here, and we have some up days here. It was not so bad so far. Never let these go without having a closer look. Even if you are not an intraday trader, if you say, no, I want to keep my positions a little bit, I'm a swing trader, I want to trade for a longer period of time, don't underestimate the information you can have on a lower time frame. Even if you don't want to trade these small movements, you should see the extra information you can have out of it. And if you see this one, you can see we had a strong move here, we had an ABC pattern here, we had a strong move here, we have an ABC pattern here, and we have a strong move here at the very end. I don't want to dig too deep here, but you can see it looks like something we've learned before. It's a 5-wave to the upside, broken by 2 ABC patterns in the middle. And this is a typical 1, 2, 3, 4, 5, broken by ABC pattern in the middle. This is a really typical one. And you can also see, if you see this one in the big picture, it's exactly the same on the small picture. So what we had here so far was 1, 2, 3, 4, 5 to the upside, and now we are somewhere inside this pattern here. So we can expect that the market will do what? Continuing into the strong situation. And the strong one was up in this case, so we can expect that the market will continue to the upside. And there's another option for this, which looks like this. It's also 1, 2, 3, 4, 5, and we are somewhere here inside this one. We have to have a closer look at this. But we can expect that the market will continue. So out from this picture, we can expect that the market after this will have a bigger ABC. But the good news, after that, we should expect something like this again. So we can just draw it over that and say, we have a good chance that this will continue once more. So on a lower time frame, we can see there's a high probability that the market, not necessarily at once, I think we have a good chance that we will drop a little bit lower here because of what we see here. You can see the very end here, this one. If you have a look at this one, this is not looking convincing for a buying situation. This looks like, I'm afraid, I don't know what to do. Maybe you can see strong move, you can see the weak move. So I think we have a good chance that the market will follow up with lower prices, which was something I can estimate like this. It doesn't, don't get me wrong, if I draw these blue lines, don't think, okay, it is exactly 4th of October in the night or whenever it is. Unfortunately, these are European Central Time, so don't worry if you're in a different time zone. I have to mention this, or I have to change the time in the future. But this is not indicating exactly this day or time in the day will be the right spot for buying that. It is just the idea, okay, we have to think about some more time, some lower prices in this case. So you can see this is holding hands. All what we've talked about here is perfectly fitting. You can see, okay, this one, and we would expect A, B, C. Okay, A, B, C. This is maybe on a smaller time frame. Maybe this is only the first part of it. So you can see this is all working together, and this is something I definitely wanted to share with you to show you that if you have a synchronization between all these time frames, you have a better idea what the market is doing next, because you can say, okay, in this picture I expect this. In this picture, this is fitting. So this is increasing my probability that this will happen indeed. So I think it's really important to have a look on both of this. So I don't want to waste your time any longer. I hope you have a first glance about the current market situation and how we deal with the markets, with all the chart technical levels, with Fibonacci, with all the Fibonacci information, and also with something like probability. If you are eager to learn more about this, just don't forget to subscribe this. I will talk about many of these situations. I want to do this regularly so that you can follow at least the bigger picture. If you want to have something intraday, we can talk about this as well. But on this platform here on YouTube, I want to present you some ideas how we see the market, what is our expectation, and give you the best opportunity to find your own way of trading and to find your own success in trading. So that's from my side. I hope you could enjoy a little bit, you could learn and get some information out of it. Looking forward to seeing you soon again. Bye bye.